Well, I'm very happy to have the opportunity to moderate this panel at our Fi21. I'm looking forward to talking with the great two speakers that we count in this session. Edith, Johannes, it is my pleasure to have you both here. So during the next 30 minutes, we are going to talk about how corporates are involved in the impact investing industry and why is this industry a good opportunity for them. As probably you know, nowadays it's very well known that profit maximization and shareholder primacy are not anymore the main drivers for corporate action. Corporates are receiving great calls from different accounts to move forward to a more sustainable system. For instance, as it has been presented in our FI yesterday, the Agenda 2030 encourages the business sector to reshape its decision-making processes to consider the 17 Sustainable Development Goals. Another example is the declaration of the Business Roundtable, which includes the most powerful corporate CEOs about the need to redefine the purpose of corporations as organizations that work for the benefit of all stakeholders. So, taking into account that context, I would like to ask Edith to introduce herself and also tell us how Mirova Natural Capital, as an asset manager, which is aimed to accelerate the transformation of the economy towards a sustainable model, works with corporates, and why do corporates join you as Mirova in your endeavors? Well, Edith, the floor is yours.
Thanks a lot, Mónica, and good afternoon, everybody. Pleasure to be here. Thanks a lot for the invitation. Yeah, just a bit of an introduction. So my name is, as you mentioned, Edith Kiss. I'm Investment and Development Director at Mirova Natural Capital. We are a fully owned subsidiary of Mirova and more broadly the Natixis banking group, obviously with a lot of corporate clients. So we started off on our impact investing journey in 2013 with the launch of our first flagship fund, Althea Climate Fund, which is a 100 million euro impact investment vehicle. It's a financial vehicle and really had a mission to bring in private sector capital into sustainable land use and pilot new models. Since in the last few years already, there has been a lot of development in this sector. So it was a very interesting journey. Obviously, with that fund, the investment thesis was around catalyzing a new type of carbon credits, forest carbon credits in the voluntary markets, and also sustainable agricultural produce, mostly like fair trade and organic and smaller scale, not the large commodities, I would say, but trialing and seeing how this can make the business case for investors. And by that, we naturally, the natural engagement with corporates was more about the offtake for those type of projects, what they produce, so typically carbon credits. So we have engaged in the past years through that fund, primarily through the selling or monetizing those carbon credits. And it was interesting to see how some of the large corporates who came along on this journey also evolved in their approach and first, just purchasing credits and then more and more looking into investing for also getting obviously cover their exposure and targets. The targets they are more and more voluntarily making and upcoming, hopefully, compliance targets that are also coming in. But also, looking into widening their impact and looking a little bit, so going on the journey. So in that context, for our second generation funds, for example, the one we launched in 2020, was already an impact investment vehicle dedicated with a large corporate investor, L'Oréal. So the L'Oréal Fund for Nature Regeneration that typically has evolved through this initial relationship through the monetization, through the carbon credits, and then evolving into more a deeper relationship and managing a dedicated vehicle for them. So I'm happy to reflect on a little bit on the motivations and why we think it's a great opportunity, and I think that's definitely in the past few years is corporates are stepping up, at least for sure. I can speak on the natural capital side and the climate and biodiversity targets around those areas.
Great, thank you, Edith. I think it's very great to see this evolution, as you mentioned, about the corporates starting with instruments are carbon credits, but now having specific vehicles to according to their motivations and interests. So now, in that, I would like to ask Johannes to introduce himself. And also tell us a little bit about BMW Foundation, about how it's related the foundation with the corporate, how do you make impact investments, and especially why the company and the family, that, if I understood correctly, decide to do impact investing through the foundation. So if you can tell about that, it will be great, Johannes.
Perfect. Hi everybody. Happy to be with you this afternoon. So BMW Foundation is a corporate foundation, but a very independent foundation under German law. So it's a known legal entity, but of course there are connections to the corporate. So the CFO of BMW is also is chairing our board of trustees. But legally we are totally separate entities, and we follow topic. The core of the foundation is a topic that is not directly related to what BMW Foundation is, what BMW is doing. The core of the foundation is responsible leadership, and we're doing a lot of leadership programs. We have a big network of so-called responsible leaders around the world, which are a very important part of the foundation, which is supporting our work, and we are supporting their work. And then we have one pillar of our work where we have the aim to foster the systemic transformation of the financial and economic system towards impact and sustainability. And one part of this work in this pillar is around sustainable finance and impact investing, because we see investments as a huge and important lever to foster transformation and societal change. And within this work stream, we have like two different sides. So on the one hand side, we are investing impact oriented ourselves. So we have one part of our endowment which is earmarked for impact investments, but we also have a program on impact investing and sustainable finance, which has a broad portfolio of things that we do, from small events, impact roundtables, to supporting networks and intermediaries in the field, and trying to kind of support this whole movement, and to kind of support, by supporting this movement, also supporting this huge transformation of our financial system. I think so. We're in contact with a lot of corporate foundations and also corporates, and it seems to me that there's an important link between the philanthropic organizations of foundations, so corporate foundations, and it's getting more diversified into corporate impact accelerators, corporate impact funds, and so on and so forth. And there is an important link between these philanthropic organizations and the corporate as itself. So we see it in our case that the asset management of the foundation is done by the asset managers of BMW. They are managing the pension funds. And with the work that we did in the foundation, and we started about 10 years ago with impact investments, at the time with the focus of like increasing the overall impact of the foundation. So looking at a foundation from a holistic point of view and seeing it as an impact organization, which should create impact with their programs, but also with the investment of their endowment. So we started this journey, and we made some changes in our strategy and so on and so forth. And we've always been in contact with our asset managers at BMW, and gained a lot of interest from them. And then they started looking into this market, doing first investments, and so on and so forth. So I think there is a kind of these different parts are interconnected and they're influencing each other.
Yeah, thank you so much, Johannes. I think that it's interesting to see the corporation and the foundation diversifying as there are ways to do to have financial returns, but also impact returns. So this collaboration is a way to show that. Huh? Well, I would like to, knowing this how do your organizations work, how do you do impact investing, I would like to ask you, in your relationship with corporates, first, what are the motivations, why they come to you to work together, and also, what do you think? What they are gaining from these relationships, with these partnerships? Maybe, I don't know, Johannes, you can start to share a little bit about that.
Yeah, happy to do so. So I think there are different perspectives to look at impact investing with regard to corporates. I think one point is, as I already mentioned, I mean, impact investing can be one part of their CSR or corporate citizenship activities. So the portfolio and the possibilities what a corporate can do in order to show their social responsibility are much broader than it was maybe 20 years ago. When BMW Foundation was founded in 1970, I think that was the only way foundations or corporates could show their responsibility towards society, maybe a foundation, and then kind of donating things and do sponsoring. Today, there's a whole portfolio, as I already mentioned. You can create your own accelerator program. You can set up your impact investment fund. You can dedicate part of your pensions towards impact. And what you're gaining, I think, you can easily compare it to a corporate venture fund. I mean, there's also a strategic interest in a corporate venture fund in kind of getting to the newest innovations that are out there. And I think with setting up an impact fund and going into the impact space, I think they're gaining a lot of information, and they have a kind of radar out there with regard to social innovations. So, I mean, there are a lot of things going on which are totally relevant for a corporate. New social innovations, new trends in society where social entrepreneurs reacting on, creating products for those social needs that are out there. And they are very relevant for the strategic, for the strategy of a corporate in the 21st century. Apart from that, of course, there is kind of reputational benefits that they can gain from doing impact investing. And I mean, of course, it is also an investment approach that totally makes sense in a portfolio perspective. So it makes sense to dedicate parts of your money towards impact, not only to create impact, but to also increase the stability of your portfolio and to mitigate downside risks in your overall portfolio allocation. I think these are a couple of points, but I think there are many more, and maybe Edith, you can add what's missing.
No, sure. I agree with all what you have said. I maybe can complement it, how we have seen also, again, from the experience, for example, with a corporate like L'Oreal. So the companies, especially on the climate journey, when they started off, many years ago, around their supply chain, one thing that is interesting that there was a lot of, and they need to decarbonize. Companies need to decarbonize. They will also have hopefully targets soon on biodiversity, and it takes time. It really takes time, and we also have the urgency. So it's more and more evident that we can't wait another 10 years for companies to map all their suppliers and all the Scope 3 emissions, etc. So what was interesting with, for example, L'Oreal, the realization that there can be beyond. They can go beyond what they're already doing in the supply chains and target key biodiversity hotspots, high carbon value, high carbon areas, which are actually nothing to do with their supply chain. So some people think this is a business case for the supply chain. There is a business case for that as well, security of supply of the ingredients, etc., which they're already doing a lot. But this is actually a fund we designed for them is explicitly to help accelerate, to go beyond, and to take also to touch on the point Johannes made on the investment approach. So when a corporate, today they have CSR budgets, and historically it's traditionally a cost approach. It's quite hard to ask to go to the CEO for I don't know, hundreds of millions of dollars, right? And suddenly, when you put it into an impact investing perspective, it's a nice win-win, because there are risks. So you might actually lose your investments, you might make more. But it's quite complementary to financial investors. So what we like is that how this can actually blend with other traditional financial investors, where we're competing for capital for a double-digit return, which is tough for these type of projects still. We strongly believe that impact investment is not about giving up financial return for other. We have to show the way how we can make it work. That's when you get a large capital flow. But it's still challenging until we have fully internalized the externalities, and until we have proper price signals. So I think it's a great approach. It's a great complementary approach for corporates, and it's actually especially useful for those who have large maybe cash reserves. So companies that have treasury, and in a negative interest environment, it's actually sometimes like a burden, like what to do with if you have cash reserves. So again, it depends on the type of profile, the corporates, and where the money is allocated from. What I like is really for them to put this into an investment mindset rather than a cost mindset, and then we can go faster. We need to go faster. We don't have time to one of the problem is that it's too slow, and we need to aggregate. So I think hopefully with this type of capital entering this market, we can go a bit faster.
Great, thank you, Edith. Well, taking in account what you said related to this change of mindset, no, definitely for corporates to choose or to decide in which vehicles or strategies they can start to invest, or they can to join or to follow the path of impact investing, it will be a strategic decision. So in your case, that I know that you Mirova Natural Capital is focusing in nature-based solutions. So how corporates might be involved in more specific way in these kind of solutions that the ones that you provide?
Yeah, sure. Happy to elaborate on that. Maybe just one more point that I forget to mention on the motivation.
Yes,
right. It's actually interesting is that we also notice when you flip from the cost to the profit, like the investment approaches, that it helps them commit with bolder targets. So it increases the ambition. Suddenly it's coming back to the point that it's not anymore a cost. So what we think is that what we see is, again, the net zero targets, voluntary corporate are committing to that. It's kind of voluntary, but we have the pressure, obviously, the regulatory society, all that, the NGO pressure. So that's normal. And we hopefully will see the similar things around, again, biodiversity. The COP is yet again postponed, unfortunately, next year on the CBD side, but we hope that we'll see some similar targets. And we also think that those companies that start investing into like impact investing, trying this type of approaches, will be more prepared to maybe invest for their decarbonization and for their change in the biodiversity, hopefully net positive investment or like a business approach. So it helps them also prepare on that journey. And in that context, we have different vehicles. So your question was about how can they invest? So traditional investment vehicle is financial vehicle where you put capital and you have financial return. We have seen in the past few years the approach of blended finance that is growing. And typically that's for public capital being blended with private to catalyze and crowd in and have de-risk for the private sector. We think that it's actually, so the corporates have the choice to go, if you have a blended finance vehicle, typically you have a junior capital tranche and a senior one, and a junior is underwriting the risk or maybe even the return of the senior. So again, in the blended, depending on the targets for the corporates, if it's and which pockets maybe they're allocating from, they can go for a senior one and pure financial play. having in mind that these impact vehicles do have those targets and KPIs around the impact, so very strongly investing around that, but still with a financial return in the mind. Or they could go also junior. So we have seen, but it's true that more like foundations, when we have some blended vehicles where it's more the corporate foundation that comes into the junior tranche, more like with still a cost kind of mindset. So it's a grant. So I think those are the two, and again, if it can be very catalytic in the junior tranche to blend. And we had to see one of the barriers when you engage with corporates and not with the maybe grant approach, but the business approach, that it's by nature of the competition and the reputational benefits we discuss about. They are a bit harder to aggregate, and typically club deals are more difficult because that's how they also use it as a differentiation, and that's why we do see they like the dedicated solutions. And as an asset manager and as a industry, we need to go to scale and we need to aggregate. So I think that's where it's a bit of challenging. How do you aggregate if you're running 50 million, 100 million dedicated vehicles? Is not the same as if you can aggregate to 1 billion. So that then we still have yet to work. And then finally, what we see is coming back to the issues that corporates are preparing. They're preparing for their targets. So we have seen now a renaissance of vehicles around carbon funds, where you invest, your return is in carbon credits. I wouldn't say this is an impact. I mean, it can be an impact investing strategy, but it's more like also to try to generate the carbon credits for their future obligations, and you can go the extra mile to make sure you invest in the highest quality possible, and then you integrate, for example, biodiversity or other SDGs. And what is interesting is that carbon is the most advanced environmental asset, and we hope that there will be more SDGs that can also generate some sort of payment or create some sort of assets like around biodiversity. So I'm hopeful that in the future we will see much more innovation in the space. At the moment, clearly we see financial vehicles and blended and then carbon vehicles are growing also in numbers.
Yeah, great. These 3 vehicles that you mentioned are, I think, available for them, and of course, I suppose that with the pass of the years, more vehicles are going to be developed, and I hope that more corporates are going to be involved. So, Johannes, I would like to ask you regarding you mentioned during your introduction that the BMW Foundation supports the ecosystem building around impact investing. Maybe you can tell us a little bit about that work and how organizations or corporates that are watching today can be involved with you, can talk with you. Maybe you can talk a little bit about that.
Yeah, happy to do so. Maybe one thing to add what Edith said. I think there's one more chance for corporates to really get engaged. If we think about non-financial support for portfolio companies, if corporates are involved, not in big scale financing growth, but in the venture capital field, I think there's a big chance and a big win-win situation if corporates can bring in their knowledge and their experience into young corporates, and this can be very motivating for employees to volunteer and to do pro bono work for young social entrepreneurs, to get people a little bit out of the corporate world and again into the startup world, which is exciting and new and so on and so forth. Just maybe 2 things around our field building work. As already mentioned, we follow this topic for more than 10 years now. We've done a lot in the field of foundations. So we were trying to convince German foundations of this idea of impact investing and mission investing. We're doing a couple of event formats, as already mentioned, from a small impact investing roundtable in Munich to bigger conferences that we're hosting or organizing ourselves. We're doing a little bit of support for intermediaries and networks in the field. We have a lot of partnerships with the impact investing networks, and we do a little bit of research funding, but very particular. What is important to know about the BMW Foundation, we're not a grant-giving foundation. We consider ourselves as an operational foundation, and money is only one of our assets. So I think what is important for us, our network is important, our name is also important, what we bring in as a foundation is important, and then maybe money is one asset that we want to bring in.
Yeah,
But
I
happy, we're
suppose
doing
that.
also a lot of bilateral calls and consultations. So happy to jump on a call with everybody who's interested in what we're doing.
Yeah, I think that a great asset is the possibility to cross learning for different organizations that wants to know more about impact investing. Well, I would like to ask you the final question that I have in mind, which is, how do you envision the future of the impact investing sector, and how will be the role that corporates might take on that future? Whatever, I don't know who wants to go first.
Edith, do you want to start?
Yeah, happy to. No, happy to. I think I'm pretty. Yeah, I think we have seen an incredible growth. So very bullish on that. I think, as I mentioned, those trends will continue around blended finance. We do hope to be able to aggregate more, and they complement very well the public scarce public capital and grants, and yeah, hopefully we can crowd in the private capital. I think on a longer term, though, I hope that we don't have to have impact investing, but we will have green finance. Like the finance will be green, and we don't have to do this as a window dressing. But I think we have to start somewhere, and there are good. I think what is also very encouraging is the top down force that is coming in. So we started off from the more like the disruptive, trying to finance those little green projects, financing the green, and then some people are greening the finance, and then hopefully the two will merge, and we get the TNFD, the TCFD, again on the climate and the biodiversity side, we get the EU taxonomy, we get all those trends. So I'm quite hopeful that we will see that very soon as a business as usual, but not there yet.
Okay.
Perfect.
Okay, great.
Couldn't agree more. I think the sector will definitely grow, and we saw it in the last 10 years that it's growing very fast. I think there will be a kind of differentiation of different approaches towards impact investing. So currently it's a kind of umbrella term for a lot of different approaches. And you mentioned blended finance, catalytic capital, I don't know, social bonds, and so on and so forth. I think we'll see a kind of differentiation of different approaches. The framework of IMP, maybe that's helpful to get a better view on like what different approaches are out there in order to not compare apples with bees and so on and so forth. So I think that's very important. There will be a challenge with greenwashing and impact washing, of course. I mean, we see it already nowadays that the big players are coming in the market. They're labeling everything with impact, and I think there will be a kind of fight to like keep the integrity of the market and to as good as possible avoid greenwashing and impact washing. And with regard to corporates, I think more and more corporates will get involved into this game with all the different possibilities they have, from investing their pension funds to setting up their own funds to really investing into other vehicles. So I think this will in the future be one big important part of their corporate social responsibility and their corporate citizen activities.
Yeah, thank you. Well, hearing you both, I think that what I'm taking here is that innovation is needed. Innovation on the side probably of the financial industry, developing new vehicles, new instruments for corporates, but also corporates itself trying to innovate in their strategies, in their business models, incorporating investments that have impact into their value chains or in other ways. So we are at the end of our panel. We want to thank Edith and Johannes because you have gave us really great insights. I'm very happy for this opportunity, and I hope you can join us on the FI 2022 next year. So thank you so much.
Thanks for the great moderation.
Thanks a lot. Thanks so much.
Bye-bye.
Thanks. Bye.